We love talking about good news. Markets.
Wow. Markets, 25,000. You got yesterday we talked about the GDP, Atlanta Fed raising the expectations to 3.25%. And of course, we're on the heels of the ADP number and right before a good jobs number that we're expecting today.
Yeah, I think so. And happy Friday, happy Jobs Friday. And they have been happy Fridays lately. And not just for the stock market. Of course, I love that. And I love that the president's celebrating that, what the stock market's doing. But the stock market was great under President Obama. What wasn't great was the real economy on Main Street. And now we're starting to see that expand as well. For example, manufacturing. We just finished the best manufacturing year in 10 years last year, according to the ISM survey. So this is broad-based. It's real. It's not just asset prices.
This is a very good point that you're making. When you want to just look at the stock market, you can do that. But the fact is the fundamental backdrop of this economy continues to strengthen. And that is why we're talking about the rally rolling on this morning. 25,000 cracked yesterday for the first time ever, notching the 7,000-point milestone, the seventh 1,000-point milestone since President Trump's surprise election victory in 2016. You had 7 times an additional 1,000-point move. Both the NASDAQ and the S&P 500 also closed at record highs yesterday. And the president, of course, weighed in on the record rise. He was at the White House yesterday.
We broke a very, very big barrier, 25,000. And there were those that say we wouldn't break 25,000 by the end of the 8th year. And we're in the 11th month. So I guess our new number is 30,000. But what it means is every time you see that number go up on Wall Street, it means jobs.
Speaking of jobs, the December jobs report is out this morning, and analysts are expecting 190,000 jobs to have been added to the economy last month, with the unemployment rate holding steady at 4.1%. You can talk about the stock market, but of course we know the stock market goes up and down. Kevin Kelly, it's been going up, though, pretty consistently since this election. But it's based on, as Steve mentions, real fundamental strength and recovery for jobs.
Yeah, and I'm going to give the president a little bit of a pass here for talking about the market. And one of the reasons why is because the market's a forward-looking indicator, and given all of the great economic data and news that has come out over the year and what he's continuing to do with his agenda, we're going to see a higher market from here. That's why we've had 3 consecutive days of record-breaking highs in the markets. And guess what? Guess what the fundamental change was? It was actually the bill that got on his desk by December 25th, and that's going to unleash the American economy, because we cannot be so dependent on the global economy. And that's what's really also helped push this market higher. So in order for the global economy to do better next year, they need the American economy to take them there. We are 25% of the world's GDP, and we need to act like it, and the president's agenda has done it.
One statistic that I loved seeing this morning, front page of the Wall Street Journal, that if you look at the broader S&P 500, this is the greatest bull market in post-war history, a gain of more than 300%. So the S&P has more than quadrupled since the bull market started, and it did start under President Obama, as you pointed out, March 9th, 2009.
That was the bottom, sure.
But this even surpassed the great bull run of the 90s.
Wow.
So in terms of this, the power of this thing as it, approaches this kind of critical anniversary.
Right.
Yeah, and the president was talking about Dow 30,000 yesterday. That got me a little nervous to talk about 30,000 so soon after 25,000.
Right.
But people weren't expecting 25.
He's becoming a market forecaster.
Yeah, right.
You better be careful about that. But again, I do think that it's based, unlike some previous rallies, it's really based on true expansion. Another stat that the Wall Street Journal reported that I love, which came from Challenger, the job analysis company, is that job cuts in 2017 were the lowest announced job cuts since 1990. So not just are jobs being added, of course, net jobs, but also major companies announcing cuts vastly decreasing. So there's so much great news. Productivity's finally taken off. We got a great productivity number in the third quarter. We haven't gotten the fourth quarter yet, but above 3%. Productivity was languishing about 1% during most of the Obama years. So I think we're showing that the U.S. economy was this thoroughbred that unfortunately was just weighed down by taxes and regulation.
And the regulation.
Take those off, and this horse is
well,
going.
this is the reemergence of the middle class.
But really quickly, speaking of regulations, which was one of Maria's themes early on as President Trump was running for the highest office in the land, right underneath, if you flip the paper over this morning, U.S. reveals oil drilling plan for the nation's coast. This is what we're talking about. This is opening up offshore areas, even though there's a fight in Florida over this. But this is what we're talking about, is creation of jobs, unleashing our greatest resources in this country, our people and our natural resources.
Absolutely right. And when you look at the regulatory framework, whether it's the oil business or financial services, the amount of regulation and red tape that was actually getting in the way of progress, that's why you're seeing an unleashing from business, and you're seeing them actually put money back into this economy.
I'm glad you brought that point up, because we had the CEO of Citizens Financial come on here, and he was talking about the SIFI designation and all the rules and compliance that they had to go through, and an allocation of resources that don't help the American economy. They can actually redeploy that and actually stoke growth in their communities where they're banking. And I think that's the most important thing. But I think a fundamental thing that we're kind of tiptoeing around here is that the dollar actually had an abysmal year last year. It was down 10%. And that did help contribute, because that helped stabilize a lot of the emerging economies. So they did well because their currencies were stronger against the U.S.
And you would think as the economy gets better, the dollar keeps going up?
Yeah, it should. But the problem that we're having is the dollar was so down because of our deficit problem and our debt and our growing debt, and you can see the correlation there. So the dollar's actually, there's worries about the federal deficit.
If interest rates go up, then generally the currency would appreciate because more money would come here.
But it hasn't happened.
Right, as interest rates head up with the Federal Reserve making moves, our debt would hopefully attract more money.
There's a feeling over the near term dollar stays strong, but longer term we could actually see it come down. But that's longer term.